This conference will now be recorded.
All right, good day, everyone. I am Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the weekly prepper, getting you ready for the week of January 19th for the trading week. And if you or anyone you know is interested in getting to know us a little bit better, learn more at wealthfoundationsnw.com or email me directly at help@wealthfoundationsnw.com. And happy to have a little chat with you about what it is you're trying to accomplish as a trader. Just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form. Trading does, in fact, involve risk. And so we're doing our, for members, we're doing our normal schedule this week and next week, the usual schedule as well. All right. So last week's news, the S&P 500, the Dow, and the Russell at some point all hit all-time highs. The Russell's been on fire lately. Now, is that a good thing? Is that a bullish thing? Not necessarily, because sometimes at the when the main markets are getting a little tired, sometimes you get this bull rush in in some of the lesser stocks. And the Russell 2K stocks are lower cap stocks, and what people are looking for growth. When the markets are already at all-time highs, sometimes people are trying to chase growth somewhere. So overall, look at this. So the S&P was down 0.3%. The Qs were down even more. So the Nasdaq tech stocks are not really in a leadership mode. Sure, you have pockets of strength like semiconductor, but overall, QQQ was down last week, and the Russell was up 2%. Look at gold surging and Bitcoin surging even more. Now, we had some Supreme Court drama come and go. And what that was that the Supreme Court was had a potential, ruling announcement day or whatever you call it, and they people thought that decision on whether or not Trump's tariffs were legal or not was potentially going to be announced, and it wasn't. And now we have another day like that coming up on Tuesday. Okay, huh? And if they don't announce anything on tariffs on Tuesday, well, then that's you won't have another of those potential announcement days until the end of February. So it's going to be kind of a Tuesday could be a big deal, or it could be a nothing burger. We just don't know yet. But we want to be aware of those types of things. And so you can see the markets were definitely squirrely around that potential tariff announcement that never came. And then things kind of shook out again, but mostly positive on earnings. And really, BlackRock, Morgan Stanley, and Taiwan Semiconductor all crushed it pretty good. JP Morgan Chase, not so much. They dropped 4% on their earnings day. So a little bit of a mixed bag there. So in financials, this past week, core CPI came in, pretty much as expected. Still running a little hot on inflation, but not too bad. PPI, same thing. Came in as at least it wasn't horribly bad news, but those can make things a little bit choppy. The core CPI and core PPI. One is basically the consumer, and one is the producers or wholesale, if you will. One's retail, one's wholesale. And retail sales numbers have been coming in very strong. So the retailers are doing well. And what you're going to see is this is the weekly heat map. You're not getting a lot of leadership from some of these bigger tech stocks. Tesla down, Google down, Meta down just a smidge, pretty flat, Apple down, Nvidia down just a little bit. And what you're getting is a whole slew of smaller companies, smaller cap stocks that are doing relatively well. And so the what you're seeing in as far as sectors go, energy outperformed everything. Consumer, defensive, real estate, industrials, basic materials, utility. Most of these are very what we call defensive sectors, and the kinds of things you invest in when you're not really feeling super excited about the big high flying stocks. So you can see tech down just a little bit, financial slipped a little bit, and healthcare. Now, tech, financials, and healthcare are big sectors. They make up a large portion of the overall market. So you've got a lot of smaller sectors doing well, and some of the bigger sectors not so much. And so we'll see what that does with the overall market. So something's got to give here. So either tech will rebound from its malaise and drive everything higher, or it could get worse and drag everything lower. So be careful out there right now. I've got a lot of cash right now because I'm in a little bit of wait and see mode. And so looking ahead to the week ahead, despite the chop, the markets and the economy are not broken. And usually you're not going to have a terrible bear market when the economy is doing fine. And so we have decent GDP growth, our unemployment rate's low. So you can't really argue that the economy is terrible. But if there's a bad decision on, I shouldn't say bad decision, if the decision to that the tariffs have to be paid back to other countries, well, and then that's going to cause a lot of uncertainty in the market. The market won't like that kind of uncertainty. So if tech catches a bid, if AI catches a bid, watch out to the upside. If not, watch out to the downside. Now the market will be closed. All the markets will be closed on MLK Day on Monday. Okay. But after that, some of the possible market movers, core PCE, which is another inflation measure, the main one that the Fed looks at, an update to GDP. So these are two big pieces, and they won't come until Thursday. Watch any tariff related news on Tuesday in particular. I think be careful around that. It may be a nothing burger, but it may be huge. And watch for any DOJ action against Fed's Powell. Okay. There will be some key earnings. I'll show you that in more detail in a moment. And so here, so a lot of this stuff is, you're not going to have a lot of anything real interesting until Thursday. So Thursday, the big numbers start to come out, except for watch out for the Tuesday potential Supreme Court announcement. Other than that, looks like a quiet week. So sectors that are strong. Okay. In case you don't know what these stand for, this is materials, industrials, energy, healthcare, consumer staples, and consumer discretionary, XLY, and real estate. Okay, so mostly defensive sectors are the strong sectors. These are the types of, with the exception maybe of industrials, maybe energy. But most of these are fairly defensive sectors. The other big sectors, the XLKs, XLF, and XLU, which is tied to AI a little bit, and communications, they're kind of moderate sectors. But there really aren't any super weak sectors right now. And so, some are better than others, but there's not a lot of weak sectors. So we have a pretty broad, the markets are broadly kind of hanging in there. So as far as earnings are concerned, we got 3M and Netflix. Those are potentially movers and shakers. I think Netflix in particular, big potential mover and shaker. We've been watching Intel and we've been watching semiconductor in general. And so we've got Intel earnings on Thursday as well. Not a lot of other big market movers here. 3M's interesting. What else is interesting? GE a little bit interesting. Not a lot. Not a lot of interesting earnings. Okay. So as far as some potential trade setups go, I've got a few things in mind. And so let's go ahead and pull up the charts and just see if I don't need this anymore. Let's go look at the SO. Here's the SPY. You can see it's got trend line support. It's above the 20 and the 50 SMA. So I would say this market's not broken by any means. It could just as easily roll over, lose that trend line support and roll over, as it could break out to brand new highs. So we don't know yet. And so that is going to be something, that's another reason that I want to not get overly committed, bullish or bearish at this moment in time. And then the Qs, they're not, that close to their all-time high. similar kind of trend line support. But look, that it's come and tested it twice, almost real closely, still holding its 20 SMA though, and the 20 SMA is turning up, but the 50 is turning down, and so it's doing a whole lot of nothing, folks, a whole lot of nothing, and so be cautious. Now, I mentioned that the Russell 2K was leading. Look at that. So boom, exploding to the upside. That's not necessarily a good sign when people are chasing these quote unquote lesser stocks or lower cap stocks or stocks that need uh, investments from venture capital firms and things like that. Those types of stocks, and they'll tend to be a little bit more interest rate sensitive as well. So yeah, we're probably so the Fed is in a little bit of a flux, but these stocks are rallying at the moment. And why? I think people are just chasing growth is why these are rallying at all. Okay, so as far as what we could look at potentially, I'd like to look at a couple of boing boing trades. If you don't know what a boing boing is, uh, go ahead and reach out to me and go ahead and send me an email. And I think that the trade that I really like here is Google. So this is a mean reversion type of a trade where it's basically been going up all year, okay, at least since July, and it's got a little pullback, just a little bit pullback with and closed off of its low of the day. Look at the 2-day RSI dropping below 30. That's a buy signal, folks. In the context of something that's surging to the upside, it takes a little breather. That's a short-term buy signal. Now, this is not, I'm not talking about buy and hold stuff. I'm talking about a trade that may last on average about 4 days or so. Okay, so our model portfolio has been really crushing it lately, but without getting into a lot of detail here about why I'm choosing this particular option, what I'd like to suggest is to in Google, Google, that I'm going to go ahead and buy in the model portfolio. I'm going to go ahead and buy a call option on Google out to February, which is 34 days to expiration. I like to do these about 30 days or more. Okay. And I'm looking for a delta 35 to 45. So this means that it's not going to be the most expensive option in the world, but we don't plan on hanging around very long. So you could not buy 100 shares of Google, but you could control 100 shares of Google. Okay, buying 100 shares of Google would cost you what? Well, it's a $330 stock. So buying 100 shares of that would be $33,000. So if you got 33 grand laying around and you want to just own some shares of Google, that's fine. You could do that. You could even do it with this pullback technique I'm using called Boing Boing. Or you could control 100 shares for much less money. Okay, so I'm going to do that. I'm going to look for a 35 to 45 delta. So I could choose the 345 strike, or I could choose the 340 strike, either of those. Okay, 35 to 45. I'm going to go with the cheaper one because the stock's already pretty expensive. And I'm going to buy the I'm going to go ahead and buy this for $860. So this is the most you could lose. People wonder, why do you trade options? Well, this is one of the reasons. It's tremendous leverage. So instead of $33,000 to buy 100 shares, I could control 100 shares for 34 days for $860. Is that a little easier to come up with? Yeah. And so I'm going to go ahead and put that in, confirm and send, and send. All right. Now, conversely, there are stocks that are using the same technique that are bearish. Okay. So we don't, as options traders, we don't care. We don't need a stock to go up. We can make money on stocks that go up or down. So using the same technique on Dell, we've got a stock that's been basically going down. Okay. And it ticked up just a little bit. just enough to bring the 2-day RSI above 70. So I'm going to go ahead and buy a put option here. Put options will go up when the stock goes down. So I'm expecting this stock to come back down and at least test this low. Okay, and that's all it needs to do for me to win. And when it does, when it goes below, when the 2-day RSI goes below 30, it goes across, it's, if you're a hockey fan, it goes from blue line to blue line, right? So if it goes from 70 down to 30, you can exit, okay, and take your probably your profit at that point. Okay, so we'll go ahead and trade that, and we'll go Dell put option 35 to 45. It needs to be negative delta. 35 to 45. Here's a 45 at the 120 strike. So I'm going to buy that for $615. So I'm going to, it's like shorting 100 shares. Okay, so it's like shorting 100 shares. You ever saw the movie The Big Short? So I'm going to make money if Dell goes down, okay, over the next week here. So I'm going to go ahead and put that on. Confirm and send and send. Now it won't fill until Tuesday at the earliest. Okay, if things get wonky, I don't like what I see in the pre-market, I could always cancel the order. Okay. So but I'll go ahead and put the order in now. Other other stocks that I'm interested in from a fundamental standpoint, I still do like some of these things, some of these semiconductor stocks. You've got a fresh breakout on Micron. Micron's just off to the races, and you would think, well, I don't want to chase that; it's too expensive. But the fundamentals are still pretty good on that. Fundamentals are still pretty good on Nvidia, especially from a growth standpoint. And so this one's not as overextended, but it also kind of is kind of in malaise territory here. So I don't really love either one of those for different reasons. Micron kind of off to the races a little too much. Nvidia kind of in a malaise. If I had to choose one or the other, I'd take the one I'd take the rocket ship. I'd take the fresh breakout, and maybe I will. Am I already long? No, I don't think I'm already long. Let's see. I think we already have a Nvidia position. Let's go back to the model portfolio here. We don't have a no. We closed out. We were in Micron and in Nvidia. We closed them both out. So maybe we could get back. We could maybe get back, and we were profitable in both those trades. Maybe I'll wait for it to have a little breather. Here's semiconductor in general. So if I just wanted to buy an ETF that tracks all the semiconductor stocks, I could do the SMH. But again, this one's kind of looking like it's off to the races a little bit, as is Intel. So some are stronger than others. Now, Intel, after a big explosive move, has pulled back quite a bit. This is almost a boing boing signal, but not quite. So I'll be watching that. I'm not sure what caused Intel to drop like that, other than maybe potentially just sort of taking profits. Another stock I'm interested in is BABA. This is another boing boing signal. And I just like how this has been coming down, 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 down. Broke out, channel breakout. Okay. Went a little higher. It's taking a breather now. But this looks like a change in tone to me. This looks like a change in tone to me. And so this is a boing boing signal because this has been going up over the last 3 weeks, got upward momentum. And I just like the space. I like to have something different that's a little bit non-correlated with the US market. So I'm going to go ahead and take this boing boing on BABA as well. Same technique. I'm just going to be boring. I'm going to use the same technique on three different stocks. And then we'll call it a day. There's some other things that I'll be looking at. So again, 35 to 45 delta. I could go with the 175. I'll just do the 175 for $500, $530. Sounds good. All right, so 3 trades, 2 bullish, 1 bearish, and we'll see how that goes. I'm looking for other potential plays. I was looking at BX. If you want to play something in financials, this is Blackstone, and it hasn't reported yet. Okay, but it did have a little bit of a breakout, And there's not a lot stopping here. We do have a high here, so I think I'm going to lay off this for now. We have a rally, base, and a drop. So I think I'm going to lay off this one. I was kind of interested in this on that breakout, but I think I'm gonna wait on that. We've got other stocks like GE. Look at that pattern. That's just a nice climbing type of a pattern. I don't like that it's formed a lower low here, but it's all within the context of a base. And so I could maybe do some kind of a strategy where I could create cash flow off of something like that. So I think I'm gonna hold off on putting on any more new trades, given my uncertainty here for the market where it's going to go in the moment, especially with the big announcement on Tuesday. But throwing out a couple three boings, I think is exactly the right strategy because no matter which way the market goes on Tuesday, all of these are set up to be potential winners. That's all I've got on behalf of Wealth Foundations Northwest. It has been my pleasure to have been your coach today. Good luck, good trading, everyone. We'll see you next time. Take care. Bye bye.